What if I told you that you, yes you, making maybe $50,000 a year, are paying more taxes, percentage-wise, than a billionaire who flies around the world in a private jet? Sounds insane, right? But it's 100% true. And before you think, oh, they must be cheating or doing something illegal, let me stop you right there. The rich aren't criminals. They're not stuffing bags of cash under their mattress. And they're not hiding money in some secret Swiss bank account. Nope. They're simply using legal strategies. Strategies written directly into the tax code. Strategies that politicians and lobbyists have quietly built for decades to reward investors and business owners. And here's the kicker. You can use many of these same strategies too. So in this video, I'm going to reveal the top 10 secrets the rich use to legally pay little or no taxes. Make sure you stay until the very end, because secret number 1 is the ultimate wealth move. The move that keeps rich families rich for generations, while regular people keep struggling paycheck to paycheck. Are you ready? Let's dive in. Secret number 10. Think long-term, not paycheck to paycheck. If you get this wrong, nothing else matters. The first secret isn't about numbers, it's about mindset. Most people live paycheck to paycheck. They ask themselves, how much money will hit my account this week? But the wealthy think in decades. Their question is, how can I grow my wealth and reduce my taxes over the next 10, 20, or even 30 years? Let me give you an example. Imagine two friends, Alex and Chris. Both make $70,000 a year. Alex spends every penny, saves a little in a regular savings account, and hopes for a big tax refund every April. Chris, on the other hand, puts money into tax-deferred retirement accounts, invests in long-term stocks, and even sets up a simple trust for his family. Fast forward 20 years. Alex is still stressed about taxes, while Chris has hundreds of thousands growing tax-advantaged, and his kids will inherit with minimal taxes. That's the difference between living paycheck to paycheck and thinking long-term. The wealthy use tax-deferred accounts to delay taxes and let compounding work faster. Choose long-term investments that get lower tax rates. And use trusts to plan generational wealth. If you want to keep more of your money, stop scrambling every December for write-offs. Start building a tax plan today. Secret number 9. Choose where to earn and invest. One of the easiest ways to reduce taxes. Change where you earn or invest your money. Corporations like Apple, Google, and Amazon save billions by setting up operations in low-tax countries. But you don't need to be a trillion-dollar company to benefit. The wealthy play the same game, just on a smaller scale. Some invest in tax-friendly countries. Portugal's Golden Visa gives foreign investors tax breaks. The Cayman Islands have almost no taxes for certain investment structures. Some move to tax-friendly U.S. states. In the U.S., states like Florida, Texas, and Nevada have no state income tax. Billionaires literally move for this. Even registering a business in the right state saves thousands. Many wealthy Californians register LLCs in Wyoming or Delaware to benefit from lower fees and better asset protection. And this is perfectly legal. Even if you don't move, just choosing the right state for your side hustle can save you thousands. Secret number 8. Capital gains beat salary taxes. This is huge. The rich hate salaries because salaries get punished by taxes. In the US, if you work a regular job, you might pay up to 37% in federal taxes plus state taxes. But if you make money through long-term capital gains, like selling stocks or real estate, you'll pay 0%, 15%, or 20% max. So while you're working 40 hours a week, getting hit with payroll taxes, Social Security, and state income tax, the wealthy are letting their stocks, real estate, or businesses grow, paying way less when they finally cash out. Let me put it this way. You're trading time for tax-to-death dollars. They're trading money for lightly taxed wealth. Lesson? Don't just work for money. Make your money work for you. Even $100 a month in an index fund is a start. Secret number 7. Be generous, but strategically. Let's talk about something that shocks people. Charity as a tax strategy. Most billionaires aren't just giving away money out of pure kindness. Sure, some truly care about causes, but let's be real. It's also a massive tax move. Here's how it works. They set up private foundations. Instead of just writing checks to random charities, they create their own. They deduct donations from taxable income. If they make $10 million and donate $2 million, they might only pay taxes on $8 million. They control how the money is used. Unlike a regular donation, in a foundation, they choose exactly where the money goes. They even pay family members to run the foundation, legally. That means their kids can earn a salary working for a charity that the family controls. Think about it. Bill Gates, Warren Buffett, Mark Zuckerberg, all have massive foundations. Sure, they help people, but they also save millions in taxes. And here's the cool part. You can do this too, even on a small scale. You don't need millions to get tax benefits. Donate strategically to qualified charities. Keep records. Every donation counts against your taxable income. Even if you can't start your own foundation yet, being generous can lower your tax bill. Secret number 6. Spend before paying taxes. This is one of my favorite secrets because it's so simple, but so powerful. Here's the basic difference. Employees. Earn. Pay taxes. Spend what's left. Business owners. Earn. Spend. Pay taxes only on what's left. Let me give you examples. You need a new laptop. As an employee, you buy it with after-tax money. But if you have a side hustle, that same laptop can be a business expense, lowering your taxable income. Traveling for work? A vacation can turn into a business trip if you meet clients, attend an event, or create business-related content. Your home office? A portion of your rent, electricity, and internet can be deducted legally. The rich take this to the extreme. Jeff Bezos famously used corporate jets and company-owned properties as business expenses, legally. And you don't need to be Bezos. Even a small Etsy shop, freelancing gig, or consulting side hustle can unlock these deductions. So, start something, even part-time. It's not just extra income, it's a tax strategy. Secret number 5. Real estate is a tax goldmine. If there's one investment that's basically designed for tax benefits, it's real estate. Millionaires love it for 3 huge reasons. 1. Depreciation. This one is crazy. Even if your property is increasing in value, the government lets you pretend it's losing value every year because of wear and tear. That means you can write off part of the property's value every year, lowering your taxable income. Example. You buy a rental property for $300,000. Every year, you might deduct $10,000 or more in depreciation, even if the property's market value is going up. 2. The 1031 exchange. This is one of the wealthiest people's favorite tricks. You sell a property, reinvest the money into another property, and you don't pay taxes on the gain. You can keep doing this over and over for decades, growing your real estate portfolio without paying capital gains until you eventually cash out, if you ever do. Dirty step up in basis. This is where generational wealth comes in. When you die, your heirs inherit the property at its current market value, not what you originally paid for it. So if you bought a property for $200,000 and it's worth $1 million when you pass away, your heirs won't pay taxes on that $800,000 gain. That's why real estate isn't just an investment. It's one of the greatest legal tax shelters in existence. Secret number 4. Buy, borrow, die. This is the ultimate rich people formula. Here's how it works. 1. Buy appreciating assets, stocks, real estate, businesses. 2. Borrow against those assets instead of selling them. Loans aren't considered income, so no taxes. 3. Die, and your heirs get everything at market value, erasing decades of taxable gains. Sounds insane, right? But it's 100% legal and completely normal among billionaires. Think about Elon Musk. He rarely sells Tesla stock because selling would trigger massive taxes. Instead, he borrows against his shares, uses that money to live and invest, and legally avoids billions in taxes. This is how rich families stay rich for generations. Secret number 3. Borrow instead of selling. If you remember only one thing from this video, let it be this. When you sell, you pay taxes. When you borrow, you don't. That's why the ultra-rich don't sell their investments when they need money. They just borrow against them. Let me paint you a picture. Imagine you own $5 million worth of stocks. If you sell them, you might owe 20% or more in capital gains taxes. But if you borrow against those same stocks, no taxes. And here's the kicker. Sometimes the interest on those loans is even tax deductible. That's how billionaires buy private jets, yachts, and mansions while reporting almost no taxable income. Elon Musk? He's famous for this. He uses Tesla shares as collateral to borrow billions instead of selling and triggering massive tax bills. And yes, you can use a smaller version of this strategy. Borrow against your home equity instead of selling investments when you need cash. Use margin loans carefully if you're investing, only if you're experienced. The key takeaway? Stop selling income-producing assets just to access cash. Borrow smartly instead. Secret number 2. Avoid paychecks. Here's a hard truth. The tax system is designed to punish employees. Paychecks get hit with federal taxes, state taxes, Social Security, Medicare, the works. The rich? They avoid salaries as much as possible. Instead, they take company stock. Stocks grow tax-deferred, and you only pay capital gains when you sell. Equity ownership. Owning a piece of a business means you get taxed as an investor, not an employee. Profits reinvested into businesses. Instead of taking out big salaries, they reinvest profits, which grow and are often taxed at much lower rates. Think about big CEOs, Jeff Bezos, Mark Zuckerberg, even Steve Jobs back in the day. They often took salaries of $1 a year but owned massive amounts of company stock. If you're an employee now, start thinking like an investor. Negotiate stock options or equity if your company offers them. Start your own side business, even if it's small. The goal? Shift from earning a paycheck to owning assets. Secret number 1. Ownership is everything. This is the biggest secret of them all. The tax system is built to reward people who own things, build businesses, and create jobs. Employees get taxed first and live on what's left. Owners? They earn, spend, reinvest, and legally pay less in taxes. Look at how the rich build wealth. They own assets, stocks, real estate, businesses. They control cash flow, deciding when and how to realize income. They use tax laws designed to encourage growth, because governments want people to build businesses and create jobs. If you want to change your financial future, start small, but start today. Buy your first stock. Invest in a rental property, even if it's just a small one. Launch a business, even part-time. Because once you shift from being just a worker to being an owner, the entire tax game changes in your favor. If this video blew your mind, imagine what's coming next. Hit that like button right now if you learned something new. Comment below. Which secret should I break down step by step in my next video? Do you want me to explain real estate tax hacks, borrowing strategies the rich use, or how to set up a foundation like billionaires do? And don't forget to subscribe and turn on notifications. Every week, we talk about money, smart strategies, and how to make your finances work for you. Trust me, you don't want to miss what's coming next. Because the truth is simple. The tax system is rigged. But once you learn the rules, you can finally play the same game the rich have been playing for decades. See you in the next video.